Well, hi everyone, welcome to the Buffett and Beyond Weekly ETF video letter, and this is Saturday, April 29th, 2023. And remember folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week we're going over a bunch of ETFs plus our XSD, which is the Semiconductor Index with our top 5 stocks, and our Technology Index with the top 6 stocks. So let's get into it. And this week, let's just remember what happened with the market. We had this declining line in the bottom indicator down here, and we had also a slightly declining line in here. So this is not a good sign, and this indicator had turned down. So for the beginning of the week, the market did what it was supposed to do and went down. Then all of a sudden, Thursday and Friday, we received good news from some of the tech giants out there, and the market took off like a rocket. And so we're testing this high again, once again in here, and we will maybe be testing this high in here at the 4,200 level, which we talked about weeks and weeks and weeks ago, because we thought we would come back up and test this level. So we'll see what happens, because don't forget, the Fed meets this week, and Wednesday afternoon at 2 o'clock, Fed Chief Powell will tell the world hopefully what we want to hear, but we'll see what happens. And let us look at the Semiconductor ETF, and that had turned down, look down here, a couple of weeks ago. So right in the beginning of April, as a matter of fact. So a good 2 weeks, 3 weeks ago now. And yes, this indicator just kept going down, broke through the 200-day moving average, and then all of a sudden on Friday started moving back up again with the rising market. So what's this mean? Well, let's look at a portfolio that I constructed for one of our friends out there. And we're looking at the XSD is up just 6.2% since the beginning of the year, so year to date, and the S&P is up 8.5% year to date, so they're pretty close. But look at the top 5 stocks, up 27.4%. But so much of it is based on the video, which is up 88.4% year to date. So if you have NVIDIA in your portfolio, and of course we have it in our growth portfolio, and the semiconductor top 5, you're doing very, very well on both these portfolios. Now let's look at the technology, because the technology turned down slightly after the semiconductor turned down, and it definitely did turn down and went down on Tuesday and just about tested this 50-day moving average. And then it came up on Wednesday, and then Thursday with the market rise just took off, and Friday, and I'm recording this just before the market closed, it's up also. And let's look at those 5 stocks. Well, the XLK is up 20.4%. Again, the S&P up a little over 8%. And these top 5 stocks are up 15.8%. So it's almost doubled the S&P, so that's not too bad. So the technology and the semiconductors are definitely leading the upcharge since the beginning of the year. Now let's look at the utilities, and the utilities are defensive type of portfolio, and it looks like it just gave a sell signal. So if you're in the utilities and you're trading them, you might want to stay away from them for a little while. But if you're not trading them, that's fine. Just be aware that we just have a downtick in here, and on our intermediate term indicator, this red line is the 200-day moving average, and the blue line is the 50-day moving average. So when you see the 50-day below the 200-day moving average, that's not such a good sign. But it's hanging in there, hanging right, or the index is hanging right at the 200-day moving average. Now let's look at the QQQs. Well, here's where we received our first sell signal. As you can see, the market itself, or the NASDAQ 100, minus the QQQs, are the NASDAQ 100 stocks minus the financial stocks. So we hit a higher high in here, but this indicator, or intermediate term indicator, hit a lower high in here. That's a definite sell signal. So the market did start down, as you can see over here, and then Thursday and Friday just took off. So what kind of gave it away a little bit was Wednesday. The market was not exactly acting as bad as the indicators were telling us. And so Thursday and Friday, it really took off with the rest of the market. So we're testing this top in here once again, and we'll see what happens. Because remember, I'm going to say it again, we have a Fed meeting this coming week, Tuesday and Wednesday at 2 o'clock. Fed Chief Powell will speak to us. The key is this indicator going to turn up or not? And that's that's pretty strange, folks. We don't see this very often at all. And let's look at the home builders, and this was 2 weeks ago, so this was about April 14th, right? Yeah, almost exactly 2 weeks ago. And we got, see this lump in here, down here? See this lump? It came down, and then it took off again. I'm talking about the black line. You want to see that black line above the red line. And so that was issued a buy signal. Now, what has happened in the past 2 weeks? Well, here's that little lump that I was talking about, came down and hit that red line and has taken off ever since. So that was a good signal. It was this point right in here. And let's draw that line straight down there. That was a good signal. It took off, hung around the 50-day moving average a couple of days, and then took off. Then we had that decline, and now Thursday and Friday, it really took off once again, exceeding this little high in here. So it looks like the housing wants to hit this previous high in here. And again, don't forget, this intermediate term indicator is pointing up. Now, let's look at the healthcare sector. And boy, 2 weeks ago, it looked really good. We got this buy signal in here, and it's been up and away, doing very well. But then we got this little turn in here. Doesn't mean anything, doesn't mean much. But up here, this indicator, now this is a 14-day or 14 period of our fast indicator. Usually we use a 3-day period, but we wanted to get the whole range of this rally in here, and you can see that we were overbought. So maybe something was giving us an indication. Now let's look at as of the other day. Yeah, that was it. That was a little signal that said, uh-oh, we might be going down. We're overbought, so we might start going down. And here's that point again. And then a couple of days, well, about a week later, we got the sell signal in here with the black line crossing down. But look what's happened over the past couple of days, and we had to fill that gap in there. And boy, we didn't expect to fill it that quick. We still have this gap down here. And we don't know what's going to happen in here, folks. But that's the healthcare, usually defensive. And some folks were asking about United Health. You were asking about Viva. And folks, those are part of the healthcare, and they are defensive. And so they've been hurt the past couple of weeks in here, part of this whole decline. Now, let's look at the oil. 2 weeks ago, we had a buy signal in here. It did very well. Now, this is the oil and gas exploration, the XOP ETF. So 2 weeks ago, or more than 2 weeks ago, about 4 weeks ago, we had a buy signal in here, and it did rather well in there. And let's see what it looks like today. Well, that turned over, and then we got a sell signal right around in here. It crossed the 50-day moving average, went below it, and now it's testing that 50-day moving average from the underside. It's got to get above that, just as any other ETF or mutual fund or stock would have to do. It will go back up and test that, and the key is, will it surpass it? And because, folks, we have the Fed meeting this week, we have no clue what's going to happen Monday and Tuesday, because usually a couple of days before the Fed meets, the market just doesn't do much of anything. So, folks, we had a pretty strange week this week with all the indicators pointing down for the beginning of the week, and then all of a sudden we got the reversal because the earnings of techs and some semiconductors. But the big names, the Microsoft, Apple coming up this week, Alphabet, which of course is Google, Amazon beat on revenues, but it didn't give very, very good indication. It said the earnings or the rate of growth of earnings from the cloud division was slowing down, so that hurt Amazon a little bit. But overall, the big stocks, especially a stock like Chipotle, just rose to 200 points, which was a little bit more than 10% because of good earnings. So the earnings are not as bad as they thought, but we do have that Fed meeting coming up. So folks, you go out this weekend, you have no clue what the market's going to do Monday and Tuesday, so don't even worry about it. Take a 4-day weekend, and we'll see what happens at 2 o'clock on Wednesday when Powell speaks, and that will move the market probably both ways Wednesday afternoon, because usually the market reacts one way and then it comes back and it goes the other way, and that's usually what happens on the Fed meeting Wednesday when Powell comes out and speaks. And so we can expect a do-nothing market on Monday and Tuesday. Folks, go out, have a good weekend, be safe. We'll see you back here next week.